If you pay any attention to financial headlines, you might think now is a terrible time to invest. You can make a big mistake when the stock market is volatile. Welcome back to the Investing Circle, where we talk all things passive income, financial freedom, and making your money work for you. Today we're talking about no time like the present to actually invest in the stock market. It's official, we're in a bear market, and a bear market occurs when the stock prices have declined at least 20% from their most recent high. What's the common cliche about making money in the stock market? Anybody? Buy low, sell high. Despite all of the books, articles, blogs, podcasts, and TV shows about how to make money in the stock market, there really is no secret. No magic involved. Making money in the stock market is summed up in those 4 simple words. It's simple, but not easy. The biggest risk to successful investing isn't a bear market, a recession, large-scale natural disasters, wars, or pandemics. It's you, the listener, the person buying the stock. When the headlines are scary, new investors continue waiting things out before jumping in. And some current investors think, I can't take the stress, I'm getting out, and going to go cash until this all settles down. There are 2 big problems with jumping out of the market in a downturn. Every yin has its yang, am I right? The yang to a bear market is a bull market. A bull market occurs when stock prices rise at least 20% from a previous drop. Let's have a little history lesson here. Between 1926 and 2021, there were 17 bear markets with declines ranging from 21% to 80%, each lasting an average of 10 months. In that same time span, there were 18 bull markets with increases ranging from 21% to 930%, each lasted an average of 55 months. You can see the first problem. If you jump out during a bear market, you miss the comeback, the bull market, which happens on average within less than a year and lasts on average about 4 years. You might think, well, I'll just jump back in when things start to improve. But that's the second problem. When will things have improved enough? You cannot time the market. And the longer you wait, the more money is just sitting in that savings account making 0.001% interest per year. And might we remind you that inflation is currently around 9%. The first best thing you can do when the market is volatile, if you have an opportunity fund, is to buy low. If that's too much, the next best thing you can do is absolutely nothing. Just sit tight and ride it out. Investing is a long con. We know that's easier said than done. Our human psyche pushes us against that kind of inaction. Doing something, i.e. taking your money out of the market, feels better than doing nothing. Leaving your money where it is. Action feels better than inaction, even when we know it's the wrong move. And your money seems safe, all tucked into its FDIC insured savings account, but inflation is eating away at that money's spending power day by day to the tune of 9%. That's not exactly safe, in my opinion. If the scary headlines are giving you some type of anxiety, don't look at them. You don't need a stock ticker or monocle to see what's actually going on. Now is a very good time to start investing. You can scoop up some real bargains if you're running the numbers and making sure that you are seeing the right type of quote-unquote metrics. The recent Amazon and Google stock splits means you can buy a share of those 2 tech titans for a little over $100, a bargain for your average investor. Buying individual stocks does require some research. If you're new to investing, the best place to start is with companies you know. If you love Apple products, research Apple stock. No worries if you aren't interested in researching individual stocks. There's nothing wrong with that. We get it. Personal finance isn't the most exciting hobby. In that case, investing through an ETF might suit you better. We did an excellent video on getting started with investing, which we'll post in the description below, that you can take a look at. An ETF is an exchange-traded fund, funds that trade on an exchange and typically track a specific index. Your money is invested in a basket of assets that provide diversity, and diversity helps insulate you from the ups and downs of the market. You don't need a ton of money to get started either. Some ETFs don't have a minimum to start investing. If your employer offers a 401k, that's another great option for new investors. The money is taken directly from your paycheck before you even receive it, which is an excellent way to pay yourself first if money tends to burn a hole in your pocket. A 401k is a retirement account, so tax advantaged. As such, there is a penalty for early withdrawal, which can be enough of a deterrent for nervous investors during market downturns. The money is invested in a fund, so a basket of assets to provide diversity. And even better if you're lucky enough to have an employer that offers matching funds. That is literally free money, something you should never turn down. So what is the actual secret to wealth? Most of us don't make high 6 figures at our jobs, and by job I mean W-2, not necessarily our side hustles. We don't have trust funds or inheritances and aren't going to win the lottery. So in order to grow our wealth, we have to invest. Invest in things that have a track record of making more money, making your money work for you. Investing in the long term is the real secret to wealth. And I actually have a great book that I got started with, and this is an affiliate link, but you can check it out. The Millionaire Next Door is a great way to open my eyes to financial freedom and passive income. So that'll be in the description below. Everybody remember, start early, contribute regularly, and let it ride. It's really that simple. So thank you for watching this video today on investing in a bear market, and there's absolutely no time like the present to start investing. If you have any comments, questions, leave them in the comment section below. If you like this kind of content, like and subscribe to come back and see the rest. Thanks. See ya.